The US dollar is little change versus the major currency pairs to kickstart the trading day for August 8th, 2025. In this video, I'll take a look at the three major currency pairs, the euro versus US dollar, dollar versus yen, sterling versus US dollar. From a technical perspective, let's get started. Looking at the hourly chart of the euro versus US dollar, you can see the ups and downs that we've seen over the last few days. Into today's trading, we started higher and then moved lower. We came back down into this swing area through here. On the downside, we do have this rising 100-hour moving average, which corresponds with the 50% retracement of this move to the downside. That's going to be a key support level if we continue this downward bias in trading here today. Right now, we are seeing support against this swing area. The swing area, by the way, goes back a little bit more further in time. If I go back to this view from the 4-hour chart, you can see where we had swing highs, broke above it, came back down, traded above and below it, based against it, moved higher, and then moved below it before finding support against it in trading this week, which also happened to correspond with the 100-bar moving average in the 4-hour chart, by the way. Going back to our hourly chart, you can see the importance of it once again, and if we do hold that, if we do come down, that's going to be the key level. On the top side, the 61.8% retracement did a pretty decent job of once we moved below it, of holding resistance against it. So there's a battle going on between the swing area, the 100, and the 61.8% retracement, and the 50% retracement at the same time. So be aware of those levels. Those are, we're in the up and down trading range here the last few days, so the market's going to break, and you look for those levels where it will break from. Let's take a look at the dollar versus yen. And speaking of stuck in a range, this week, this is the 4-hour chart. So this dotted line always represents the beginning of the week. This dotted line represents the end of the week. And you can see that at the high for this week, which happened on Monday, we moved up to test that 100-bar moving average on the 4-hour chart, then moved down to the 200-bar moving average on the 4-hour chart, then moved up toward the 100-bar moving average, and then back down toward the 200-bar moving average, not once but twice. And now we're back up testing the 100-bar moving average on the 4-hour chart. So the market this whole week has been up and down, up and down. I mean, within the 100 and 200-bar moving averages. Guess what that tells us? That tells us the market doesn't really know what it wants to do. And so going forward, we're going to look for a break with momentum in the direction of the break. That's what traders do. They find patterns. They find levels where they can lean against, where they can find hopefully momentum in the direction of breaks, and go with it at that point with a low risk tolerance. So we're going to be looking for a break of the 100-bar moving average with momentum. If we do that, we're going to look for higher levels, including the 200-day moving average. If we break this level, we're going to look for lower levels, including the 100-day moving average, and that's the way it goes. Let's take a look at the sterling versus US dollar to end this video. And in this case, this week, this is the hourly chart. What we saw this week was it basing against the 100-hour moving average way down here, way at the beginning of the week, where the market finally said, okay, let's move higher. We got above the 200-hour moving average, and we got above the 100-day moving average. Admittedly, the price traded above and below that 100-day moving average with this swing area as a guide as well, but then decided that it's time to move, and we did, and the market moved higher in trading yesterday, moving up to the low of this swing area through here, defined by a number of different swing lows and swing highs going back in time. And what we did was found willing sellers in trading here today. We're seeing very narrow trading range, ups and downs, with the swing area and the 50% retracement, by the way, in the way on the top side. So sellers are leaning as we move up, maybe taking some profit into the weekend. We had the Bank of England a hawkish cut yesterday that helped to propel the market higher, but it was still a cut. So we keep that in mind relative to other countries like the U.S. But in any case, we're going to need to get above the 50% retracement level to increase the bullish bias for the sterling versus US dollar. If we can't do that, then we could see a rotation, a rotation back toward the 38.2% retracement, which was a pretty decent level of where we found old support right here, and where we found resistance right here as well. So be aware of that level. We also found support against it in trading yesterday before moving to the upside. So this is our support. This is our resistance. The buyers are more in control, obviously, but we're consolidating trading here today. So that's my look at the three major currency pairs that kickstart your day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.